GM, we are live. Welcome back to The Big Picture, where we unpack the intersection of macro, of TradFi, of politics, and of course, crypto. I'm joined once again by my wonderful co-host, Mr. Thomas Bahamas. Thomas, GM, how's life across the pond?
GM, things are going pretty well over here. I am super excited for our chat today with Truflation's founder and CEO, Stefan Rust. So can't wait to get his takes on all the macro headwinds, what's going on with lagging government data around inflation, how all this impacts us in crypto, and where Solana might be headed next.
Absolutely, TB. Stefan is an absolute legend. He's a crypto OG. So before we get into it, probably worth explaining who Stefan Rust is and sort of where he came from, right? He's the founder, as you mentioned, and CEO of Truflation, but he's also the ex-CEO of Bitcoin.com. He's a very, very early adopter of Bitcoin. I believe he bought BTC for the first time when it was at $5 back in 2012, which seems like it was decades and decades ago. Later on, he won the $200,000 award from Balaji's challenge, and that was around building a censorship-resistant feed for inflation, and he's absolutely smashed it with Truflation. Now, many people don't likely know this about him, but I've had the pleasure of chatting with Stefan quite a few times over the years. He's lived all over the world, which in my mind makes him sort of the perfect, ideal candidate to bring as a guest to The Big Picture. But he was also a swimming champion before he joined the world of tech, before he became a serial entrepreneur. So quite a fascinating founder background story. Thomas, you've been fairly deep into research on Truflation and inflation, all the data around this as well, right?
Yeah, it's hard to ignore it in crypto, right? So I'm really fired up for this. I think that we kind of need to set the table for people before we bring Stefan on, right? Because what he's building, it genuinely could be one of the most important things in crypto. And I think that most people haven't really heard of it yet.
Definitely. Unless you're in the White House and then Scott Bessent's talking about it left, right, and center. But yeah, to set the table, let's talk about Truflation. I guess in the simplest terms, it's the government measures inflation, as we all know, when they publish their official numbers. But the problem that Stefan identified way back when is that they do this based on a system that was designed in 1921. Which is outrageous, right? It's even older than the Howey test, which was in 1933, I believe. So these guys go out and manually survey 80,000 items. They publish the data, but it's about a month to 45 days, so a month and a half old by the time it comes out. So Stefan goes and he looks at this and he goes, you know what? We can do this on chain. We can do it almost instantly. We can do it far better than what the government is doing. So what they do now is they aggregate 80 plus data providers. They've got millions of items of data that gets fed into the Truflation network, and they come out with much more realistic data, much more accurate data. And the mainstream media has sort of been trying to understand how they do this since 2022. And every time I see an interview with Stefan with the CNBC guys and so on and so forth, they're really confused. How can one man and a team do a much better job than the government, right? So they've absolutely smashed it. Surprisingly, it has a 0.97 all the way up to 0.99 correlation with the CPI. So by the time the government numbers come out and it's been 30 to 45 days, so they're actually accurate, they're almost 100% in line with what Truflation had published a month or a month and a half earlier. That's fascinating. Now, a couple of things that I want to mention here as Stefan is joining us. As far as they relate to price action and as far as what Truflation is doing as well, we know that the dollar's been tanking, which typically means stronger Bitcoin price action overall, crypto as well. ETH and Sol have typically benefited from this in the past as well, but that's not exactly what's going on this month and for the last sort of 2 to 3 months as well. Some analysts have said this is to do with uncertainty. We'll talk about uncertainty with Stefan in just a second as well. On the other hand, you've got some of these TradFi analysts, senior analysts, coming out and saying we're going to see a Bitcoin, crash to 50, move back up to 100 by the end of the year. Others are saying no, it's we can only really speculate about 2027, and realistically we'll hit $225,000 for Bitcoin. So it's all very, very confusing for us. And I think the more we focus on price, the more we lose track of all these macro indicators that Stefan and his entire team at Truflation are tracking very, very closely. So Stefan is joining us. Let's skip ahead. Stefan, thank you so much for making time to chat to us today. I really, really appreciate it. I'm just going to intro you once again very, very briefly before I dive into data and Truflation, all the good stuff that you're working on. So platform, Truflation, recently mentioned by none other than Scott Bessent himself, which is insane to think that a crypto-native organization is being referenced in the White House. The crypto and AI czar, David Sachs, also talking about it. Cathie Wood also talking about it in her recent talks. And they're all saying it's a far better metric, a set of metrics, set of data than what the government is offering. So that's fascinating, I think. You guys track, correct me if I'm wrong, Stefan, up to 30 million data points daily. And it looks to everyone who's talking about it, including people in the White House, that the observed numbers tell a far better, far more accurate story than the lagging indicators that come out of the BLS in the US as well. So with that, Stefan, welcome to the big picture.
Thanks for having me back, man. It's good to see you again, Jack. Thanks.
Absolutely. Great to have you here. Now, I want to start with an interesting sort of journey back in time here. I was just talking with, right, so long time ago, and you were talking to the anchors about why Truflation data is just objectively better. And they were having a very hard time to understand why this is the case. You know, one man and a team, how can they be doing a better job than the government itself? So paint the bigger picture for us here, right? Over the last decade, money printing, inflation, trust in institutions, and how it all sort of comes together in Truflation and why it has a massive impact on us today.
Yeah, look, I mean, how did we get around to this? And, you know, it was really what really triggered me was the way that Yellen and Powell berated the whole world and told them, don't worry, we've got you covered. Inflation is only transitory. That was really just, don't worry, you're not educated enough to understand this sophisticated thing called inflation and how we then, in this nebulous room, and we decide what interest rates are and how much money printer we need to make, you know, how much money we need to print. And so all those things sort of came together and just looked under the carpet and realized that they do surveys. I send out a survey to 1,000 households, and that represents the cost of living in the US. 1,000 households, they fill out the survey once a month. They submit that survey, most probably via fax, back to the Bureau of Lagging Statistics that take that data in, fill it into a form, ingest that into a calculator that then changes and shows how that number works. If you look at that, and we're in this time was about 2021 when we really looked at that and realized, oh my God, you know, it's like, what has happened? You know, how has the world evolved or not? And so we then really took a detailed approach. What do we need to do to make and build trust? The one advantage they have is they have two big advantages. They have stickiness because $5.5 trillion worth of bonds are tied to inflation. So inflation protected securities. Number one. And then number two is they're the government. We trust the government, and government only works with government numbers. So they have this vertically integrated stack that works for the government. And so, okay, so how can we change and how can we disrupt that? Number one is we need to be transparent. So the blockchain there's nothing more transparent than a blockchain where you can then follow the source of the data. You can see the calculation on how that source is embedded in a final index. So that was really important to us. Immutability, accessibility, all of those elements that we live with from a blockchain all need to be embedded in this calculation called inflation. And so that was one criteria that we really set out to build. And obviously, the blockchain being the future of technology, the future of rails in which finance will be operating, we need to make it smart contract ready. And so we started building that out. We started aggregating data using APIs instead of using sort of forms and manual fill outs and surveys. We used census data, where we actually pulled in the data from credit card usage in the US. A lot of the bills are all paid by a credit card or check. So how do we capture that data? And we have a team that actually now built that out and tracks all of that. And the beauty around inflation is it's not only just the cost of goods, but it's everything that touches an economy. It's your housing, it's your shelter, it's your transportation, it's gas cost, it's food cost, it's the investment capital, it's the commodities, etc. So we then all of a sudden started aggregating a whole set of financial and economic data to be able to capture that, not only into now casting the inflation read, but actually forecasting into the future where inflation is likely to be going. And yeah, that was sort of really the genesis, and that's sort of a bit of the background, the context of Truflation and where we are today. And Fortunately, we really spiked. So inflation did go up to, Truflation went up to 12%. Inflation went to 8%. Nobody believed the 8%. Everybody started wondering, how is this 12% calculated? We went through the ringer. We were battle tested. A lot of the institutions and the economists out there, the PhDs, they all started criticizing and wanting to know how we're calculating this.
And you know what, with
Luckily,
that, you know,
yeah.
Stefan, I've got a question there. So,
Yeah.
okay, so you decided to take a look at the Fed's process, right?
Yeah.
You know, they're a team, they had a process that they calculated inflation, and
Yeah.
it was incomplete, right? So they're looking at a data set that not only is old, but it's not complete. Do you think
Yeah.
in your mind that this was something that was just a bad process that they had set up, or is this something that they were kind of like knowingly gaslighting us and like deceiving the public on it? You know, like what's your opinion on that?
So my opinion is they were just going through the same notions that they've been going through the last 100 years. They hadn't innovated, and like any government bureaucracy, they just grow and grow and grow. And you get so stuck in your ways that trying to change something is so hard. That change just became inevitable. And so you're working off not 30 million items, real-time updates. You're working on maybe 60,000 items that are delivered to you via survey, or even 477 people going manually with an iPad to the grocery stores to try and track this, right? So it's like, that's just, I just think it was, legacy processes, and it is not maliciously done. But ultimately, the deterioration in quality of data from an independent entity or institution inside the government, the Bureau of Labor and Statistics, supplying that data set, which has been deteriorating over decades, to the Federal Reserve, right, or the FOMC, which then decide on interest rate or money printer, right? And so, and not only does that same bureau do the inflation calculation, they also do the employment calculation, and we've seen what and how bad those are and how inaccurate they are. And so we started doing employment index. We now have a PCE index. So we've started aggregating and building more and more different types of indexes that we feel leverage the data sets that we have and identify that there is a big demand in the market for more accurate and improved data sets.
Stefan, we touched on a few different data sources there. I want to dive deeper into some of those and Truflation as well. But I think sort of zooming out, it's safe to say that as an industry, we lived in the past, in the not so distant past, in this sort of bubble of our own, right? In this extremely volatile bubble. But now we're increasingly correlated as an industry to some of these macro events that we're talking about. Inflation, obviously, policy shocks, a single tweet from the White House can really send things up or down. So as a data guy, I think you're probably the best person to ask this to. What's the single most important factor or data set that we should be watching other than price? Obviously, is it CPI? Is it global unemployment you mentioned there? Is it liquidity? What do you think, if you had to pick a single one that we should pay attention to and become experts of understanding as far as where price is going to go next?
We call it real yield. And we take a look at the yield that you're paying or that the market is paying for bonds that are out there. And you can, depending on your time horizon, I mean, ultimately, let's look at the 10-year real yield, right? If it's 4.5% and you take Truflation adjusted, so you minus the Truflation, which, went down to 0.6, right? So that's we're going to hit deflation, right? So that's coming. And when that comes, people are going to start moving money faster, right? And or they're going to be allocating their monies into 4.5% bonds. So that means risk off, right? So people are taking money right now out of the markets because Truflation is showing 0.6, or now it's 0.9, so it's gone up a bit. But in real terms, that's 3.5% interest that you're paying or earning if you buy a 10-year bond. And that means for big pension funds, for big institutions that are very risk averse and are happy with a 3% APY, not what we're used to in crypto, where we're looking for 12 or 20 or 100% returns. These institutions are really happy with something in the range of 3-4%. Big family offices, they care about preserving wealth, not about creating wealth. And so I think that's a big difference. So if that's the case, then you're seeing all this money come out of crypto because crypto is perceived as risk on assets, right? That's a risk class, right? The dollar is going up, right? We saw, you mentioned earlier, it's coming down. It's come down again a bit, but we saw a slight spike, sort of go back up again, mainly because I think people started to realize, whoops, the real yield and Truflation, when Scott Bessent mentioned Truflation, people started using Truflation in the calculation of what is real yield. People are beginning to realize Truflation is 45 days ahead of the government number. So real government number is going to come down. And it did come down. It came down to 2.4%, below expectations, but it didn't move the market. I don't know why, but it hasn't moved the market. And so, I don't know, this market is really hard to read. It's very different. And people are beginning to realize that the data from the government is unreliable. I need to find alternative sources. Truflation is one of those alternative sources. And luckily, we've built a level of trust in the market that people are beginning to use that and make investment decisions off Truflation. And we just had a report come out from Bloomberg where they did the analyses and they've identified not a 45-day, which is the average based on Truflation's analyses, which is public. And again, you can go and take the code and do your own regression analyses if you like. But they came up with Bloomberg come out and said 30 days and to an accuracy of 99.91%, right? So that's
mind-blowing.
actually...
Yeah, that is crazy that even a Bloomberg terminal user, someone who's willing to spend 20, 30 grand on getting real-time data, is now realizing that 45-day lag can cause a significant error. And I want to talk about that time as well. So as of this morning, when I checked, the Truflation numbers were at 0.92%. I'm sure it's changed a little bit because you guys are so accurate, but the official numbers were at like 2.9. As you mentioned, they sort of came back down to 2.6. That discrepancy between both the numbers and the 45-day lag, what are you doing differently, and how have they got it so wrong?
I mean, I'd just say they're way behind, right? They're far behind. They don't track. We track 30 million items. They track 60,000 items. We pull everything as much as we can from certified real-time assets, APIs, and so we can just track it to a level of granularity and a greater accuracy. So we generally swing higher on the upside and lower on the downside, and take into account we're 45 days ahead. And so that's ultimately what they're just behind on, and we're trying to get even better. We realize that at some point somebody's going to catch up and try and innovate, and so we've just aggregated more data sets. We're getting more granular along the ways, and we're making more of this data sets available to everybody. We're going to enable prediction markets to use that data. And how do we loop back into our forecasting capability to get ahead from just a real-time timestamp now to getting better into the future as to where these data sets are going?
And it fascinates me that all of this is happening on chain as well. And as you mentioned, in a completely transparent way. Just very, very quick follow up on that. I know we want to get into the data as well. Uncertainty is another one of these metrics that you've spoken about in the past. Just this week, it hit an all-time high. Once again, it seems like it's sort of following gold's price trajectory. It's going parabolic. Markets obviously dislike uncertainty, and we're seeing it impact prices. Prices are lagging fundamentals. There's all sorts of retrospective analyses that we can attach to this. But on that topic of uncertainty, you've mentioned in the past that it can be an opportunity as much as it is a risk. So I guess for people that are very much focused on price, should we see this current spike in uncertainty, which is now higher than COVID levels, higher than the 2008 global financial crash levels, should we see this as a big red flag, or is there also opportunity in there? Is there a silver lining, I guess?
I don't know if I should say this, but get some fucking balls, right? But it's like investors need to, the market's changing, the geopolitical situation's changing, technology's coming fast, and I think it's too much for people to handle and rack their brain around. It is, and crypto, we can handle this. We deal with this all the time, ups, downs. Goes through 30,000, 20,000 down to 3,000, 70,000 down to 3,000, right? We've gone through all of these turmoils over the last 15 years, right? And so I think we have a higher resilience for volatility. The traditional markets aren't used to that. They like quarterly, steady income, right? They like, consistency all the time. And right now, we've had consistency for the last 40 years where we know how the world plays out. Global trade happens. Everything's easy. It's standard. We can plan this out. Our models work based on historical information, based on industry verticals. Everybody's boxed into an industry vertical. That is no longer the case, right? All of a sudden, technology goes horizontal across every industry. If you're not in technology, you are not the technology business, you're going to become obsolete, right? You're seeing AI disrupt human employment capacity even faster than we've expected. The investment going into that. Then we've got the geopolitical change. We've got Russia in there. We've got China, we've got the US, all in this fight for global trade. Meanwhile, global trade is at a highest level it's ever been. The Bank of International Settlement put out a report that fabric is stronger than ever. More trade across the planet than ever before, right? So, contrary to all the belief, the market is humming. The businesses are booming, right? We're struggling with new technologies. We're coming to terms with the new dynamics in tariffs, in trade, but we're coming to terms with that. We're innovating. We're continuing to drive. And there is so much opportunity in this change. And it's allowing people to get and lean into that and take the whole change in a positive stride, right? What is positive about this? Where is it going? How do we solve problems versus putting barriers and banning us from going down that path? Let us go down that path. Let us hurt ourselves. Let us get cuts. Let us learn how to walk, run. But we will learn how to walk and run as we do as humans and babies, right? We've all learned how to walk and run and stride and go faster and do better. And the same is in business. The same is in technology. The same is in all of these evolutions. Except,
I've got to stop you there. I've got to stop you there because I'm getting too excited. I've got to jump in. All right. So I loved so many different parts of what you said there. So obviously, we are in crypto. We're used to the volatility. Everybody is not. So to see, the way that things are changing and for you to actually be able to kind of dive into that data and really be able to find the silver lining and see the positive side of that, like, how can you explain that to our listeners, right? Like, what can they be looking at that's going to help them make sense of all the chaos, right? Like the way that the news works, the way that everything works, we just get bombarded with information. There's big news with this, Trump's doing a tariff, this is happening, there's a potential war. But if you look through that on a platform like Truflation, you're able to see, okay, what's actually going on underneath these announcements? Like, how can I do this as well, right? Because I struggle with this, and I'm sure everybody does, right? I don't want to be looking at headlines. I want to be looking at the data. So direct me to, how you're coming to those conclusions, and, tell us how we can all do that.
Yeah, I mean, I've been in this now for 4 years, really, going deep into the data, trying to understand all the economics. The advantage, I think, is find your sources of truth, right? Go find your sources of truth. And I think what you're doing, SolanaFloor, you've created a channel that educates users around all of the different workings. And unless you're building in this industry, unless you have some kudos or some credibility, some longevity in the industry, don't go for the first big hype. We hear noise, tariffs 200%, right? And it's like, It's an anchor. All of these are clickbaits that may have an indication in a direction it's going, but it's not going 100% in that direction, but it's going to lean towards that direction. And for us as users, as individuals trying to deal with all of this noise, is how do we sort of find our sources of truth and get to the pace of where it's going in the direction, right? There's a shout out. We know that's the goal, but it's not going to go there right away. It'll move there slowly. And to identify those stages, you know, we've got all the sources available that we've never had. We have YouTube channels out there. You know, what you're doing, right? You're educating users. People are following you. These are the channels you go to do a search in your channel. What are some of the history conversations? Who's been talking about what? Come and do your research here. Use AI. You can now download a Claude bot, run it on your own computer, and then act as your agent to help you identify opportunities. And if you don't want to use Claude bot, go to Perplexity, go to any other AI tool. And then the economies that are growing, the new economies that we see emerging are going to be Ethereum, Solana. It's going to be any other platform, right? Whatever other economy it's going to grow there. These are the platforms that matter, right? Solana has a developer. It has a population. Look at the developers and builders as population. The community, it's a population. And the people building stores on the land called Solana are the app developers. It's Jupiter. It's Camino. It's all of these, it's Hivemapper. There's so many different people building retail outlets for you to participate on and go do your shopping. Go to that shopping, treat them like a shopping mall or something, So it's like, these are the future economies. This is where inflation happens. This is where money supply is going to grow. The velocity of money matters. And so that is, I think, the world that we're shifting towards. And a lot of people haven't yet got their head around moving into a digital realm.
Yeah.
And that is that's the biggest transition that we're going to be experiencing over the next decades. And that digital, all AI, at some point they're getting paid in tokens. And those tokens are going to be digital tokens. Those are going to be crypto-based tokens.
Okay, you're speaking my language with this. I love like the combination of agents and crypto. I think it's going to be one of the next big narratives myself. But we've got to kind of jump into inflation a little bit.
Yeah.
So in crypto, we always talk about inflation. It almost seems like people are kind of rooting, for the economies to go down so that their coins can go up. But do you want to talk a little bit about what has been going on with inflation, especially with the US? I feel like the last few years has been an insane roller coaster when it comes to inflation, right? We're seeing numbers reported that are completely wrong. We're seeing historical highs. Do you want to just kind of talk about, where we are specific to the US? We'll talk about the world later, but I live in the US, so it's what I kind of want to hear.
Yeah, no, the US also drives, worldwide trade, 60 to 70% of the world trade is done in US dollars. So the US dollar, the US economy is the engine of the world right now. And so from that, it matters the most. And anyway, inflation itself doesn't, if the number is 2%, if it's 0.9%, if it doesn't impact any of us, right? It really has no impact on our day-to-day lives. But if you look at what has been happening over the last 5 years, and you look at the cost of goods, they have gone up by 30%.
Yeah.
So that means your shopping basket, when you go to the grocery store, where you go 10 times a month, you're realizing every time you go, wow, is this expensive? Every time you go to the grocery store, you're realizing goods are becoming more expensive. And that is having a significant impact on the population. And the benefactors are asset prices. So a lot of the money that's been printed, that $11 trillion that was printed during COVID, went into assets. So it didn't go to the people and didn't get distributed to everybody. It went into assets. And assets, in some cases, when we had zero interest rates, were crypto. And crypto was a big benefactor of the money printer, right? Because more money came into the market. And we're seeing an area where the US economy is still the biggest economy in the world. It's growing faster than any other economy in the world. And it's the most transparent market in the world. You have the most visibility into monetary policy and fiscal policy. And as a result, it remains a very attractive market where a lot of people want to put their money and buy US dollars and retain and hold onto US dollars.
And
How do we,
apologies, just while we're on the US,
No.
I want to jump in because I want to go straight to the top of the US, right? There's this beautiful man in the White House, Trump, who seems to sort of agree with your thesis on data and inflation and prices when you go to the grocery store. He's basically saying the Fed numbers are garbage, they're bollocks, they're too old, they're stale. And Truflation has come out and validated that. And it's interesting to me that the White House and Truflation, which is platform built on blockchain and trust and transparency, are somehow validating each other. My question to you, however, is: are you comfortable being a tool in some sense, where politicians are using the reality, the truth, to attack the Fed? Is that something that you wake up thinking about? Do you think about it at all?
No, I mean, I do think about it, yes, but we launched Truflation in an era, in a whole different administration under Biden. And that administration was totally ignorant and Luddites towards any new technology. Anything that didn't come from within the system was just poison. And we grew out of that market. All we are trying to do is leverage our data to show a point that we believe is an accurate reflection on year to year change in consumer products. So all we're doing is tracking the performance of how this time last year, today last year, was the price of these items, and what is it today, and what is that change? That's all we're stating and stipulating. And we've been doing that since we launched in 2021. For any administration, anybody could have picked up the data. And when we were up at 12%, we were slammed and criticized, and
I remember
only a certain constituent believed us. I mean, we had New York Times, wrote Paul Krugman, economist, Mr. Economist, wrote a huge article slamming Truflation, which was great because it gave us the visibility and allowed us to get battle tested. So, but yeah, and that's sort of what we had to go through. And ultimately, maybe it's part of growing up, and maybe we are a bit more grown up, but we're trying to stay impartial as much as we can and just paint the picture as we see it, as neutral as possible. I have certain personal opinions, but that's not reflected in Truflation. And we have a lot of debates internally within the team as well, right? In terms of trying to keep that balance and making sure that we are as neutral as we can be.
That makes a lot of sense. And just while we're at the top of the sort of US regime, if you will, another person who's been mentioning Truflation is, of course, the AI and crypto czar. So I'd be remiss not to touch on AI as well. You mentioned prediction markets there. So the connection of those two things, I want to get your thoughts on AI and prediction markets and crypto and blockchain and how all of this sort of ties in. As a founder, for you, this doesn't necessarily have to be representative of Truflation, but I'm curious what your advice would be on a personal note to someone who's in the younger generation, maybe entering the workforce, thinking about what to study, and they see this AI revolution. They see, huge amounts of anxiety in their peers, right? Financial nihilism. They don't think they can get a job anymore because even the government data can't be trusted. So they see crypto maybe, offers a sort of quick win, but you can also lose a lot of money if you don't have access to the right data and make the right decision. So how would you advise someone who's looking at all of this into AI, prediction markets, and crypto, and what advice would you give them?
So as a father of 3 kids that are about to graduate this year and next year, I really feel the institutions, the education institutions, have not done their job. They have not prepared the youth for a world that they're about to enter into. number one. And I think the fear mongering that mainstream media is doing is even worse. It's just creating a level of depression, sadness, lack of energy, enthusiasm, and all of that combined is really bad. I, you know, I just think there's such an opportunity, and I work with the kids. I mean, they've gotten into crypto really early on. They downloaded their own wallet. They have a phantom wallet. You know, they have their pass key. They know how to keep it secure. All of that thing, you know, they learned that very early on. And I think, you know, they have money. They could invest with it. They had to learn how to bridge. They had to learn how to stake. They had to learn how to get liquid tokens. All of that thing, they've all learned all of that. And I spent the time with them, teaching them how to use those tools. And some got it a bit quicker, some a bit slower, but they're always asking, how much money do I put aside this month? Even with the pocket money, always putting a little money aside is just what in assets. Even if they go up or down, you're just doing it for the long term. Think long. You can have short, immediate, quick capital gains that you want to play around with. You may lose, but you also have to think just long term. Just put a tiny portion of that. Make sure that at the end of every month, you have more SOL than you did last month. Even if it's just one SOL, doesn't matter. But just make sure you have one more or half a more, whatever you can afford. Just make sure you have a little bit more at the end of the month. That number one, right? And number two is, I mean, you can download ClaudeBot for free. You can run it on your own laptop, your Mac. Everybody has a laptop. That's one thing schools have done. They've given everybody a computer or made sure everybody has a computer that can afford one. With one, just download it and just try stuff, play, experiment. What I think you need in a workforce today is a youth that is willing to experiment. Don't come to me, ask for permission all the time. And can I do this and do that? And how do I do this? It's just go and experiment, let rip. And if something comes back, let me know your learnings. You tried this, it didn't work. You know, I've had interns in the company in Truflation. They just went on to Hugging Face. They downloaded a piece of AI code and they started, you know, trying to do and calculate sentiment analysis for 3 months. They did it. They created a basis code. We gave them a Twitter account. They could then streamline Twitter data. They pulled that in and calculated a sentiment analysis. In 3 months, we had actually something that could be scaled up across the whole of Truflation. And so that's the ability. That's just the desire and that hunger to learn, experiment, practice. You've got nothing to lose coming out of university or college. You're just, you know, you've got, the world is your oyster.
Yeah, no, I love so much about what you just said. So it almost kind of speaks to your platform, right? So the institutions have been lagging and failing, you know, the youth of our day right now, right? And it's been tough for them. And you can kind of see that angst in that generation. But what we're seeing is like, you actually don't need those institutions to actually get ahead. And it really seems like the bright spot for this is going to be AI and crypto. You know, whether it's together, I think that it is going to be, but it really seems like those are the two parts that are really going to help them. And I think that, you know, Gen Z is one of the first generations that is so computer native. They're so, you know, everyone says they're on their phones all the time or whatever, but what that means is they're digitally native, right? They understand this from the get-go. They understand how to actually use this, and they understand these problems. I mean, I'm sure that there are going to be some that, you know, don't catch on as quick. But I think that there's a lot that are doing way more than what's anticipated. And I don't know how you look at that through the data, if there's any exciting data that is kind of pointing towards that, or if that's just, you know, what you're seeing, you know, anecdotally. But that seems like what is going on right now. It almost seems like a little bit of a revolution against the institutions, right?
Yeah, I mean, and I wouldn't know these. I think it is in crypto, it is in AI, it is also going to be in health and wellness, right? I mean, look at that whole category. Nobody goes out and drinks alcohol anymore. They're all worried about their Aura ring telling them something, you know, the Apple Watch telling them something, their Garmin watch telling them some other data, the Whoop, I don't know, the athletes all have full on, you know, clothes underneath that are constantly measuring their body temperature, their heart rate, their pulse. Yeah, all of that data needs analysis. That's who's going to do that? How do you process that? How do you, the biotechnology? What are the biology elements that I need customized for me? I mean, there's so many areas that will allow us to live longer, to live healthier, to be stronger, to be fitter, to be mentally more astute. And I think everybody can learn. Let's unlock the restrictions and the barriers to allow innovation in those categories. And how do we encourage the innovation across this generation coming into the market now, but also future generations? We see, sadly, the data actually speaks the opposite. We're seeing actually the youth unemployment rate going up, right? So youth unemployment is really high in China already. So you're seeing it up in the 20+%. In the US, it's growing. In Europe, it's growing. So it's more and more challenging for youth to get their first job. Number one. Number two, especially in sort of more white collar jobs, right? In programming, in other areas. But maybe more in the construction area, but that hasn't really picked up yet, and we haven't seen that as a significant, sort of balance to the current unemployment growth in the youth category.
Do you think that contributes to this financial nihilism that we very briefly touched on? That this idea that I'm not really going to make it because I don't have the same set of opportunities as my parents' generation, and I don't trust the institutions and the data to the same extent that they did. So I'm just going to go and maybe take higher risk. To me, that's one end of the spectrum. And on the other end is this very informed, very educated, very sort of accessible, an entire community of young people that have access to technology and understand the future through AI and crypto and all this kind of stuff. It just seems like we're sort of creating a world that's splitting two groups into two. And I'm curious if you have any data on that about, financial nihilism versus I can just go out and build things, which it sounds like your children are very much embodied.
I'd say it's, I don't know, financial nihilism. I think we've become, the population's become lazy. They become dependent on the government, dependent on an institution. We've become too dependent on social welfare. Don't hurt me. It's, I can't do a mistake because if I do a mistake, I may fall over. I may hurt my finger. I may cut myself. I can't cut myself because if I cut myself, oh my God, panic breaks out and I got a little bit of blood. That I think is the flaw of the system, and too much dependency has grown on institutions. That's been our problem. The institutions are too big. I was seeing, I think in the number in, I can't remember which country it was, but countries are now sort of broaching 40 to 60% of the employment in a given country are government-related employees. So that means more and more people are not there creating new economy. They're actually just moving stuff around to manage an economy that is deteriorating.
Yeah. You've mentioned this in the past as well with the administrative costs of growing institutions. And now at the end of the day, it sort of trickles down and it becomes a cost that we all as consumers and eventually as retail investors have to sort of shoulder as well. I want to touch a bit on bad policy now that we're talking about the cost of institutions. Is crypto, initially it was this idea that we're going to reject bad policy and we're going to build our own world, our own universe, if you will. Have we made significant headway in that dream? If you zoom all the way out, again, I think going back to 2008, the global financial crisis, Bitcoin was born. You were a very early adopter of it. This idea that it was sort of an escape hatch from bad policy, bad government, growing institutions, growing cost of institutions. Do you feel 15 years later that it's worked to a certain extent? It's not worked as much as it should have done? Are we winning as an industry, or are we just another sort of risky asset that trades on Fed liquidity and Donald Trump's tweets nowadays?
We remain a risky asset, and I think we haven't yet proven the market to the world that we are as dominant as the traditional. We haven't disrupted the legacy industry yet. because it's a big ass industry. I mean, it's a huge, it's quadrillions, right? And so here we are, we've broken into that. We've created a significant impact and increased the awareness within this industry that's quadrillion big that they need to take and be conscious of. They need to be aware of this $2 trillion, $3 trillion industry that's emerged, popped up out of nowhere over the course of 10 years. So we've done an amazing job to get here. But the fight isn't over, in my opinion. I think now we've really got to start disrupting and changing. And I really applaud, Brian Armstrong is the sole fighter for the Clarity Act. One of the sole, vocal individuals really fighting against the Clarity Act, because they're asking software engineers to be broker dealers. So Camino, the Phantom team, right? The hyper liquid team, they have to become broker dealers. So they need to go and apply in the US for a license. And these are DeFi non-custodial solutions, right? And so why? And it's because we need to protect all the middlemen in Wall Street, right? All the 15 different toll takers across every single transaction we need to protect. Instead, what we tried to do when we set out crypto was to rejuvenate. And what we tried to do at Truflation is build from the bottom up something different, a different approach, decentralize the data, make it available to anybody, provide that transparency to it, take a different approach to aggregate that data, and make that available to anybody. And so that's what I think we're trying to do in crypto and decentralized on the blockchain. And our job's not done yet, right? And I think there is a strong constituent that has a strong vested interest in obviously seeing token go up and willing to sacrifice anything to ensure their token goes up, because their outlet for token is that big pension fund that's looking for a 3% yield. And it's not enabling and allowing everybody to participate in that token go up. A select few and the existing legacy, the ones that took us down the path of 2008 financial crisis, allowing them to take control again. And they're trying to coerce us into changing our regulation and the crypto way into the existing model and the existing rails. And we don't want to go, my view, I mean, some people, I don't know what the industry wants to do, but I prefer not to go down that path. Let me put it like that, right? I really think decentralization is the future. Do we want all of our data stuck within Grok, they're all centralized in these platforms that it's up to them to decide whether they want to open source. I'm a big user of sports. I do a lot of sports. That's my 5 a.m. workout, take my mind off crypto to go work out. Strava, right? I have a Strava since the beginning. I loved Strava, great thing. And then you read they're going IPO with the user data. So, and I paid a subscription. And so they're using my data as their source of generating their IPO, for which I paid their service for, and they give me nothing in return for that. That's not the crypto way.
Yeah, that's definitely not the crypto way. And I like.
Where's my airdrop?
we have to push back on that, right? And the job. I like that what you said is like the job is not done for crypto, for Bitcoin, for any of this. But it seems like you guys are doing your part very well with providing better data. And just kind of to give a shout out to our audience, to the DeFi users, traders, crypto enthusiasts, how can they start using Truflation today for an edge? And, what are you building right now that you're most fired up about to tell them?
So we're building a whole bunch of fun. So we're taking our Truflation data, which is economic based. You can learn how inflation is calculated to try and predict where certain elements are going. You can experience the cost of eggs in your retail, in your grocery store around the corner has gone up to $6. Right now, Truflation is showing $3. You can then predict it's going to go up. And so you'll be able to participate based on your own experiences in an economically identifiable personal, relatable environment as to what you think and where the economy's going, and then be able to participate in that and ideally learn through that. That's one thing that we're trying to do, right? So
Yeah, and
building prediction.
I live in California, so I would
Yeah.
imagine no matter what store I go to, everything is going to be highly
It'll be more
inflated, right?
expensive. We try to take as much as account as we can, but that's one thing we're doing. But also just sign up for our newsletter. Go to Truflation.com. You get 7 days free trial. We're going to a credit-based system where you can just buy $10 worth of credit, and you can go on anytime. You can download some of the data, and they roll over. They don't expire. So you can actually just go and use it. We've tried to grow. And so we've had a free-based model, and sort of we've realized that a lot of people use the data. It's extremely valuable, and we need to subsidize some of the infrastructure and the team that are working around this. And so we're just doing credit-based. We're not charging you. If you just want to buy one off and cancel the subscription, and you just have your credits, and if you pay them as you use the system. So. You get 7 days free. You can learn around, touch around. If you're signing up to our newsletter, you get that for free. And you get a lot of insights, and you get alpha. We show you where and what opportunities are going to come. We don't actually tell you. It's more an educational process, but we tell you real yield is up. That means risk on assets are going to go down. They're going to go into more safe assets. Dollar is likely to move up, right? So all of those as a correlation to in events that are taking place or pivotal changes that are happening.
Absolutely. Now, not only talking to you, but definitely going to Truflation and getting involved with the newsletter as well. It is absolutely alpha-packed. And in the interest of time, I hope you don't mind here, Stefan. I'm going to sort of put you on the spot a little bit. We like to run through a very rapid, quick-fire round of questions at the end. Some of these are spicy. Some of them are vanilla. I hope you're okay with these. We're going to go through them as quickly as possible in a couple of minutes or so. We have about 8 or 9, if that's okay with you.
Let's go.
Let's go. Thomas, do you want to kick us off?
Yes. So Bitcoin at $5 purchased on eBay in 2012. Did you hold or sell early?
I held and sold early.
Both winning. Okay, so unfortunately, there seems to be
my
a bit of
first sell was 9 months in, so I waited 9 months, and it went from $5 to $300 something, and I had to sell because I had to pay a bill.
Profit's profit.
Profit is profit. I think well played. So I want to ask: is the government lying about inflation, or are they just terrible at measuring stuff?
Terrible at measuring.
Nice. Now, we talked a little bit about, or a lot about AI and crypto, but do you think that agents paying other agents in crypto is the big next narrative, or what do you think about that?
Yeah, I mean, agents are going to pay agents in crypto. Definitely, it's going to be digital currencies. I can't pay $1. I mean, what's the dollar? It's going to be a digital dollar. It's going to be a stable coin, but it might also be a utility token, right? So the agent will decide what currency it wants. These currencies will be atomically swapped. You're going to need DeFi protocols to ensure atomic swapping. I don't accept Mercado Libre dollars. I only accept Shopify dollars and USDC. Okay, I only have Mercado Libre dollars. Where do I go to change it? Oh no, I need to go onto some pool where there's liquidity pool. I need to go into Fluid. Fluid's got liquidity pools between dollar and Shopify and Mercado Libre. Swap, go. Agents are going to handle that whole process, and it's going to happen in the background, and it's going to be as cheap as your utility bill. As in the unit costs on your utility bill, not the whole utility bill, just the unit costs on your utility bill.
Scary, but exciting future as well. I think I would largely agree with you that agentic AI is going to explode in maybe ways that we're not quite able to comprehend yet. Moving back to the White House, then, Stefan, thoughts on Scott Bessent? Do we love him? Do we hate him?
I mean, you're asking the wrong person. He's just promoted Truflation. I love him. I mean, I think he's one of the smartest financial secretaries, treasury secretaries on the planet today. He is eloquent. He's very astute. and extremely intellectual and understands the financial market really well and can communicate with the financial industry really well. Yeah, I think he's really a savior, a God bless, to the US
Fantastic.
and
All
the
right.
world, for that matter, for the West.
Yeah. Yeah, and he's made a bunch of big changes too. I guess we could see that in the data. Now, one more question from me. Solana, Ethereum, or Base? If you had to choose one chain to rule them all, which one are you picking today?
Oh, I got to say Solana, right?
Yeah, I mean, you don't have to. You don't have to, but
No,
we would like that, of
no.
course.
I think there are. I think Ethereum and Solana are the winners, hands down. I just think nobody else comes close. Bitcoin's an asset. It's just going to stick along. If you want to save money, build Bitcoin. If you want to be a builder, if you want to create DeFi solutions, if you want to be a part of a world tomorrow, it's going to be Solana and Ethereum. I think nothing else really is going to come close to any of those two. And the momentum is behind those two, hands down.
Just before we wrap up in that case.
Different approaches, but yeah. Sorry.
Yeah, no, I'm happy that the first time I asked you that question, you gave a very similar response. You said, likely these are two chains that are going to win in different ways. They might win in some overlapping ways, but it is inevitable that they are both winners. And I'm happy to report that opinion hasn't changed. I fully agree with you. Final question in the interest of time here. Clarity Act, is it going to get passed in 2026 or not?
In 2026, yes. I think it will be broken down into components to pass through in stages. I think, the realization within the financial institution after passing the Genius Act, how certain mistakes that they've made, and they're now going into all the nitty-gritty details. And the lobbying body behind the traditional financial services industry is just too powerful, and there are too many vested interests involved in that. So it's going to have to be broken down into smaller chunks and then passed in that way. So certain components will be passed this year, others won't be.
Fingers crossed it happens sooner rather than later. Stefan, this has been incredible. Love chatting to you. Every time we chat, I feel like I'm reinvigorated. I get this new sense of optimism, and all this macro madness sort of seems to blend into the background. So I do hope that our audience has enjoyed it as much as me, and I'm sure Thomas Bahamas as well. It's great to see that the White House itself is referencing Truflation. So congratulations. I think all the hard work that you've put into Truflation over the years is really, really paying off. And now for anyone that wants to follow Stefan, it's the real S Rust on X. It's at Truflation, and it's of course it's truflation.com. Go and sign up to the newsletter. Go and check out some of the indexes. There's some really serious ones. There's some really fun ones. Stefan, thank you so much for joining the big picture.
Thank you very much, and thanks for having me again, Jack. And nice to meet you, Thomas. Bye.
Yeah, great to meet you as well. Thanks for talking.
Yeah.
We love it.
Thank you.
Yeah, I think yes, let's see.
Oh, I think it's just me and Jack on. Is that right?
All right.
Man,
what an eye-opening conversation. I love chatting with Stefan. Just again, the bullish energy that comes in. Just from a 20-minute chat, you can talk about China with him, you can talk about the US with him, you can talk about the White House. And as much as it's sort of doom and gloom, it all sort of comes back around to, look, you can go out there, build something and improve the world around you. And I think he really lives that crypto energy. And it seems he's sort of transferred that energy into his children as well. Did anything stand out to you? I think this is the first time you've spoken to him, right?
yeah, so that was my first time. The energy stood out, and like it was everything that I wanted and so much more. He was awesome. Like I feel like him and his team just like took on the Fed and decided to like, hey, your numbers aren't good enough. They seem like BS. I can do a better job. I'm going to pull in 30 million data points and show you the right way. Like I feel like it's such a good story, and I feel like I don't know why I haven't been using his platform before. Like I'm going to go sign up now, and I want to see this data. Like it's incredible.
The data is incredible. It's great, and you have people like Anthony Pompliano, who obviously has very much a financial vested interest in having up-to-date inflation data, and he references it. Kathy Wood, who runs one of the biggest, most successful hedge funds in the world, references it. Scott Bessent, David Sachs. So obviously, what they're doing is right. A little bit of context here as to why I think it's the right time to talk to people with a very broad macro view, because just yesterday, the Federal Reserve also announced $18.5 billion. They're pumping money into the US through overnight repos. Now, that is the fourth largest liquidity injection since COVID. So clearly, as much as we look at price and it's extremely depressed, it's lagging fundamentals, liquidity moves are slowly being made. And I think this ties nicely into this sort of global uncertainty index that we were talking about earlier as well, which is almost double COVID levels. It's far higher than 2008 global financial crisis levels. And it's almost triple the levels of uncertainty that we saw in markets around the invasion of Iraq as well. So obviously, nobody wants to see war. We want uncertainty to decline. But with the recent military moves as well, that seems like it's maybe going to persist for a little while longer. Now, what we are looking forward to is some of these macro analyst price targets. Some say 100,000 by the end of the year. Others say 150,000. We had a JP Morgan analyst coming out and saying, no, realistically, it's going to hit 226,000. Meanwhile, where are we today? BTC is at what, 60, 65K. ETH still below 2K. Sol just, I think, managed to scrape up over $80. So I think, yeah, all this macro uncertainty really ties into, if you find, as Stefan called it, your sources of truth, then you can sort of pick some clarity and move forward. Any final thoughts from you, TB?
Yeah, I mean, with all those numbers that you just said, and with the way that Stefan's thinking about this, like it kind of leaves me, long-term bullish, and short-term kind of monitor the situation. It seems like everything is there to have a positive outcome and for things to go well. But we're just not seeing it right now.
We might not be seeing it for the next few weeks. But the good news is we are going to be talking to experts. We're going to be talking to VCs, to investors, to early investors. We're going to be chatting with trillion-dollar asset managers. We'll have Franklin Templeton on in the coming weeks as well. So in the meantime, make sure you are subscribed to SolanaFloor. Make sure you're following the big picture for all of these expert opinions, macro takes, an understanding of where we are, where we're going, hopefully how to get there. And of course, if you want more information generally from across the Solana ecosystem, then you go to SolanaFloor's X account, follow us on X for more updates. Go to youtube.com/SolanaFloor for all your weekly deep dives. That'll be video format coming from myself and my co-host here, Mr. Thomas Bahamas. And with that, I want to thank you all for tuning in. GN to you all, and we'll see you next time.
GN, thank you all so much.